Hi, and welcome to Down to Finance Australia podcast, where today we'll be breaking down the first home buyer scheme so that you have all you need to know about the new changes that have came into place. My name's Sarah and I'm one of the mortgage brokers here at Future Finance Group, and today we are joined by Mandy.
Hello.
And Molly. Welcome.
Hi.
Molly's first podcast today in the hot seat. So very excited to have Molly here as well. So like I said, we're obviously here to break down all of the new scheme eligibility, what documents you guys will need, and also explaining just the ins and outs of, I guess, the structure of the first home buyer scheme. So I guess to start with, just making sure that you guys are aware, with this scheme, you only actually have to contribute a 5% deposit to the purchase price of your home, and there is no LMI or lender's mortgage insurance involved. So the government actually come in and be like a guarantor for that portion. So I guess it's a really great scheme for people to get into the market, because I guess the first hurdle that most people find challenging is actually saving their deposit. So, obviously with it just being the 5%, it does make it that little bit more achievable. So I guess moving forward, what are some of the main changes that we've seen come in as of the 1st of October this year?
Yeah, great question. A big one is the income caps being removed. So previously there was an income cap of 125,000 and 200,000 for couples. So if you earned over that, then you were no longer eligible to be a part of this government scheme, and then your LMI or lender's mortgage insurance is applicable if you're borrowing above 80%. But the change from the 1st of October is that there is no income cap.
Yeah, super exciting.
Yeah, you can earn, 210, 250,000 as a couple, and you're still eligible to be on this scheme and only have a 5% deposit, which is making it way more achievable for a lot of first home buyers, removing a lot of those barriers. Yeah. So it's really exciting.
I know for, particularly quite a few of my clients, it's definitely changed their game plan now, that they can actually go ahead because they weren't eligible, previously because of their income.
And a lot of just over that cap the previous cap as well.
The
and
amount
it's just
that
so frustrating.
you'd have a single applicant and, you'd do all of their income, get their notice of assessment document from the previous year, and it was like 129,000.
Yeah.
And you're like, oh God.
So close.
So then, that means that they're then having to come up with a bit more deposit, plus LMI is then applicable. Their interest rate is then increased as well. So,
and it can really affect the borrowing capacity. But now that that's gone, it's going to help so many new people.
Absolutely.
Yeah. And then with the price caps.
Yeah, so
Molly?
that's another exciting thing. So they've increased the price cap of the purchase price, which is really good because obviously houses are increasing a lot at the moment. They've increased it to 950,000 in Melbourne.
Metro.
Regional's a little bit different, but there's a postcode.
Yeah, we've got a postcode calculator that we will actually link it in the podcast description and our obviously social bios and things like that. But if you click on that, you can actually pump in the postcode because even Australia wide, the price caps are slightly different from state to state. So we can definitely get that postcode linked for you guys to check what the price caps are for any particular areas that you're interested in, and that's something that we would research for you as well after we have our client appointment with you and work out what your goals are, where you're wanting to buy, etc. We would confirm specifically in those areas for you as well. And then of course you've got the regional first home buying scheme as well, which comes with a different set of price caps. Again, we can look those up for you. So that's very exciting there.
100%.
So with these scheme places as well, it is just for owner-occupied purchases, so it can't be an investment property, which is something that I think is important to point out. So it does require you to be buying the house to move into.
And if you've previously owned an investment in the past, it then causes you to be ineligible to be on this government scheme because you've forfeited that first home buyer spot by owning an investment property.
Yeah, absolutely. So that's actually a really good point that quite a few people have not realised as well. So I guess let's move on to who qualifies under the new scheme. So I mean, obviously being a citizen.
Yeah, you've got to be an Australian citizen, but also a New Zealand citizen can qualify as well, depending.
Yeah, absolutely. Or a permanent resident. Yeah. So that's another good one that's changed of late. I've had a couple that we've been able to now push through because, they've got their permanent residency or New Zealand applicant as well. So,
they need to be at least 18 years of old, 18 years age.
Not owned a property in the past 10 years. This is a really, really good one.
Confuses a few people.
Yes, for people who have owned a property in the past. So you might have, bought one in your 20s and now you haven't owned a property over the last 10 years.
10 years. Yeah,
absolutely. So you actually then are classed as a first home buyer under this scheme place. So, so that's a really cool one.
So even if you've owned an investment property over 10 years ago, then you can, the way we mentioned before about, if you've owned an investment, you're no longer eligible for this scheme. If it was over 10 years ago, that's where there's that kind of exception to the rule.
Absolutely. Yeah.
And I think a big one as well is the 5% deposit. It has to be genuine savings.
Correct.
Someone can't just put 5% deposit in your bank account and you go buy. You've got to actually genuinely show that you've saved that
the lenders want to know that you can actually afford the mortgage repayments when it comes around by, showing that 3-month history statement there of putting funds aside.
Yeah. And you've also still got to, meet the lender's general criteria in terms of policies. You've still got to be able to show that you can service that loan amount and things like that. So there are a few check boxes, but I guess that's why we're here to guide you through that process and make sure that we're ticking off all the boxes.
Clients don't need to know the ins and outs of all of these rules, and it's our job to check all of that for them.
Absolutely. And that's obviously, why using a mortgage broker can be very, very beneficial because the documents that you need, which we'll touch on in a sec, but, we've got to make sure, like I said, the eligibility with the lenders and the paperwork that's involved with the first home buying scheme. Yeah, it's, not something that you want to probably be doing blindly either.
That's actually a really good point. So what sort of paperwork is required for under the first home buy scheme?
So you've got all your normal things, we obviously need to show your identity. So we want, your passport or birth certificate, your driver's license, Medicare card specifically. You definitely have to show your Medicare card. And then you've got the stat deck as well. So the stat deck is simply a document just stating that you haven't owned a property in the last 10 years.
Or your partner.
Your partner.
Yes, if your partner's received first home buyer eligibility schemes previously, then unfortunately that does rule you out as well.
So, and the stat deck is required to be witnessed by, there's a whole list of them, which we would, let you know who to go and see. But people like pharmacists, police officer, they're sort of the main ones. There are quite a few on the list, but you would be required to take your ID documents to be witnessed for that stat deck. Then Molly, you touched on the deposit and savings required.
So
how would we prove that?
So we'll get your bank statements, particularly that account that you have your savings in, and just to make sure that it does have that 5% deposit, and that it's a consistent savings each month or week or
absolutely. You've then obviously got just like your normal documents that you would need for any sort of purchase application. So things like your contract of sale. I mean, you can get pre-approved for this. You don't have to have a contract of sale.
Yeah.
But yeah, so these are things that we would be sending in for unconditional approval. Yeah, anything else that we've missed?
Income.
Well, yeah, that's an important one, actually. Yeah. So, like we've mentioned, we need to obviously demonstrate to the bank that you can afford this mortgage as well.
Payslips.
So, very important one, actually.
Another thing we didn't mention as well about the genuine savings is that it doesn't necessarily have to be bank account if you are a renter. They can use your rental ledger. So that's one thing that, a lot of people who might be buying a property that are paying rent, and it's obvious that they can afford the repayments, but so they're not able to necessarily save this large chunk of money. We can use we still have to have genuine savings, but we can use your rental ledger as proof of being able to make those mortgage repayments. So that can be
that's
assistance.
A handy one to definitely assist you.
Yeah, so we can get a copy of that. That's one of the documents that we can then provide to the lender as a bit of supporting evidence to strengthen your application as well.
Yeah. Then let's talk about like any tips or warnings, around the first home buyer scheme. I think with any scheme, there's obviously pros and cons to this. So a pro being that, it does make it easier that you can get into the market that little bit quicker and things like that. Do we have any sort of not cons, but just warnings that you pass on to your clients?
It's still your standard bank credit assessment. There's no special, waivers or anything when it comes to assessing your application. It's still standard. They look at, your income, your bank statements, the way that they would with just a normal, everyday lend.
Yeah. So making sure that, you've got good conduct in your accounts,
your credit history as well.
Yes, that's a very important one. So we would want to make that. I guess for me, it's even if you do have 5% and it's a $900,000 purchase, just because the caps have increased, it doesn't. The conversations I have with my clients is, it's all still comes down to affordability. In terms of mortgage repayments. So I think that's one to highlight, is just because you've got, you're able to then go and buy that $900,000 property. We want to assess that, your everyday outgoings and everyday life costs are still going to be aligned with a mortgage repayment, because just because you can buy at $900, can you make that, I don't know, $5,000, $5,500 a month mortgage repayment? So we really, and essentially you're then only having 5% equity of your property as well. So, these are just little things to be aware of, and just making sure that we're making educated decisions.
And there are other expenses that someone who hasn't owned a property before that they wouldn't consider. So things that might come up, like rates, for example. That's something that we need to factor in on top of the mortgage repayment that you now need to pay. Now you've got a property, and insurance. On that property as well. So they're all little bits of extra things that we need to include into your budget to make sure that you can afford that mortgage repayment as well as all those extra expenses.
Yeah, absolutely.
I guess a con though as well is not a con, a pro, sorry. You're eligible for 80% and under rates.
Rate one,
for the scheme.
Which
is really good.
Versus if you were in that lender's mortgage insurance territory, you're then paying for rates that are,
a lot
higher.
Rate, like a more expensive rate for sure.
Correct. And then obviously you're not paying lender's mortgage insurance. No. And if you're at a purchase of 800, 900,000, that's
massive.
That's the best part of 25 grand that you're saving straight up. So, we want to disclose all the goods and the bads, I guess, but I think overall, like, as long as, we're educating our clients and supporting them to make those educated decisions, and we're laying it all out on the table, I think then, overall it's a really great scheme to get people into the property market.
Yep.
I guess now that the 1st of October has ticked over, it's a perfect time for you guys to reach out to see if you are eligible for this scheme. And, we would obviously be more than happy to help.
Absolutely.
Yeah. Thanks so much for joining me, Mandy and Molly. Well done on your first podcast. It was very good to have you. And thank you so much for joining us on Down to Finance Australia podcast. Please reach out if you have any further questions. Thank you.
Just remember to keep in mind, these podcasts are just general advice. And if you are after something more customized, reach out to your financial advisor, or you can reach out to us and we'd be more than happy to help.